So yes students, today now let us start with second part of tax audit chapter. Yesterday we discussed till turnover concept. Now I will start discussing tax points. While calculating turnover of share brokers or sub brokers, there are multiple trading apps, Motilal Oswal, Grow. So when you are doing audit of share brokers, for share brokers, what is the major revenue? The major revenue is commission. Okay, so or brokerage income. When you are calculating turnover of share brokers, you need to consider only brokerage income. For example, I purchased like one share through Motilal Oswal. Let's say share cost is 1200 rupees. On 1200 rupees, Motilal Oswal commission is 10 rupees. Now, through Motilal Oswal, I purchased it 1200 rupees a share. So, share cost is 1200. How much is commission of share broker? Commission of share broker is 10 rupees. So how much I paid? I paid 1210 rupees. Now, when you are calculating turnover of Motilal Oswal or Grow, okay, this 10 rupees is the turnover of share broker. Are you able to understand? So whenever you are calculating turnover of share broker, what you need to consider? You need to consider only brokerage income as turnover. I am paying 1210 rupees to Motilal Oswal or I am paying 1210 rupees to Grow. But total 1210 rupees is not turnover of Grow. Only whatever the brokerage income is there, 10 rupees, that will be treated as turnover of Grow. Okay. If they also do trading on their own account, then full sale value of such trades will count in the turnover. What do you mean by this? Let's say Motilal Oswal, it is individually buying shares and it is also individually selling shares. So, like Motilal Oswal, it is share broker, independently it is buying and selling shares. So, whenever Motilal Oswal is independently buying and selling shares, whatever the sale value of shares is there, that will be added as turnover to Motilal Oswal. And along with that, for share brokerage, whatever the brokerage income received, that will also be treated as turnover. While calculating turnover of commission agents, turnover is equal to only commission earned. You know commission agents, right? Let's say there is one mobile showroom, Select. It's a mobile showroom. What it is doing? Let's say it is authorized dealer for Apple. What it will do? From Apple, it will take iPhones and it will sell iPhones in India. For each iPhone sold, 3000 is the commission of Select Mobiles. Okay, Select Mobiles is authorized dealer for Apple. So what Select Mobiles is doing? From Apple, it is taking iPhones and those iPhones are sold in India. For each iPhone sold, how much is the commission? Commission is 3000. Now, I went to Select Mobile Shop. I purchased one iPhone. iPhone cost, let's say iPhone sale price is 1,15,000 rupees. I paid 1,15,000 to Select Mobiles. So, Select Mobiles received 1,15,000 from the customer. Total 1,15,000 is paid to Select Mobiles. Even the 1,15,000 is paid to Select Mobiles, 1,15,000 is not treated as income of Select Mobiles. Whatever the commission 3,000 rupees is there, only this will be treated as turnover or turnover of Select Mobiles. Are you able to understand? So whenever there is commission agent, in case of commission agent, what will be taken as turnover? Only commission income will be taken as turnover. If risks or rewards of ownership pass to the agent, then full sale value received or receivable is treated as turnover. What do you mean by this? Let's say Apple is there. Apple told, like, I am selling iPhones to you. That means whenever Apple sells iPhones, like risk and reward is also transferred to Select Mobiles. Apple is selling for rupees 1,10,000 and Select Mobiles is reselling. Okay, he do resale for rupees 1,15,000. In this case, what Apple is doing? Apple is not keeping Select Mobiles as commission agent. Apple is selling for 1,10,000. Whenever Apple has sold, risk and reward of iPhone is transferred to Select Mobiles. Select Mobiles is reselling in India for 1,15,000. Profit margin of Select Mobiles is 5,000 rupees. Are you able to understand? So in this case, if Select Mobile resells in India and makes money of 1,15,000, total 1,15,000 is treated as turnover of Select Mobiles. Very simple. Whether the person in India is he agent or reseller. If person in India is agent, only commission will be treated as turnover. If person in India is reseller, then total amount received on sales will be taken as turnover. Okay. Next, speculative transactions. Give me 1 second. In case of speculative transactions, turnover is equal to absolute total of positive and negative differences, profit or loss. What is best example of speculative business? Best example of speculative business is intraday trading. Let's say I am doing intraday trading. I bought and sold Reliance shares today itself. I got profit of 18,000. Next, today I bought and sold Adani shares. I got loss. I got loss of 20,000. Today I bought and sold Infosys shares. I got profit of 30,000. Today I bought and sold TCS shares. I got loss of 10,000 rupees. Now, how to calculate the turnover? When you are calculating the turnover, the thing is, whenever you are calculating the turnover, you should ignore whether it is positive or negative. You should take absolute figure. You should take 18,000. It is negative. Even though it is negative, you have to take absolute figure. Absolute figure means what? Irrespective of plus or minus, whatever the amount is there, profit or loss, that amount should be taken. So absolute figures are to be taken. So 20,000, 30,000, 10,000. So my today's turnover is 10 plus 30, 40 plus 20, 60 plus 18, 78,000 is turnover. Are you able to understand? So whenever you are doing speculative business, in speculative business, for each transaction, whatever profit amount is there, whatever loss amount is there, you have to add all profits and all losses. You have to take absolute figure while calculating the turnover. Are you able to understand? While calculating turnover of derivatives, in case of futures also, absolute profit plus loss. What do you mean by this? You know futures, right? In your financial management, you have studied about futures. Whenever you are dealing in futures, either you will get profit or you will get loss. So whatever the profit amount is there, whatever the loss amount is there, total profits and total losses are to be added. You have to take absolute figures. So you have to take absolute profit plus loss, that will be taken as turnover. Are you able to understand? In case of options, turnover is equal to absolute profit or loss plus premium on sale of options. What do you mean by this? Let's say I am HDFC Bank. What I have done, I purchased buy option for 85 rupees. I sold buy option for rupees 87 plus 3 rupees premium. 3 rupees premium. That means what? I am banker. Internationally, I am buying option at 85. And internationally, I am also selling the option at 87. Now, how much is my profit? My profit is 87 minus 85. My profit is 2 rupees. Next, whenever I sell buy option, how much amount I receive? Whenever I sell buy option, I will get absolute profit or loss plus premium on sale of options. So whenever I sell option, whenever I sell 87 rupees option, how much premium I have received? I have received premium of 3 rupees. So how much is my turnover? My turnover is 5 rupees. Are you able to understand? So whenever you are dealing with options, in case of option, premium component is involved. In case of futures, there is no concept of premium, but in case of options, there will be premium. So whenever you are dealing in options, what you will do, you will take absolute profit or loss. Along with that, you will also consider premium on sale of options, that will be taken as turnover. So in this case, my turnover is 5 rupees. Are you able to understand? I have taken profit or loss, and along with that, I have taken premium on sale of option. 5 rupees will be taken as turnover. Next, open positions at year end, turnover counted in the year when squared off. What do you mean by this? Let's say on 22nd March 2025, I purchased buy option for rupees 90 on 20 April 25. Now tell me when this transaction will square off. I purchased on 22nd March, but this transaction will square off in 20 April 25. That means this transaction will square off in 25-26. So whatever turnover of this transaction is there, the turnover will be recognized in 25-26. The turnover will not be recognized in 24-25. That means as on 31st March of the previous year, if any option or if any future is not squared off, don't consider its turnover. Consider its turnover in the year in which that transaction is actually squared off. Okay. Yes. One doubt asked is, in options we get loss. It added to the turnover or not? Yes, it will be added. For example, in this case, I purchased option for 85. I sold option for 81. Is there profit or loss? There is loss. 85 minus 81. My loss is minus 4 rupees. Even though it is minus 4, we need to take absolute figure. How much is absolute figure? 4. Plus how much is the premium I have received? 3. Total 7 rupees will be treated as turnover. Are you able to understand? So whenever you are dealing with derivatives, either option or future, in that transaction, whether you get profit or you get loss, you will take only absolute figure. To that you will add premium, that will be treated as turnover. Are you able to understand? You can see here absolute profit or loss. Loss also I have considered. Okay. So this is the definition of turnover. Now shall I start definition of gross receipts? Yeah, I know the explanation is a bit lengthy because so much of concept is there, in-depth concept is there, and this is the first time tax audit is inserted in CMA final. All cost accountants are fighting for tax audit signature. High chances in examination he will ask very in-depth questions about tax audit. That is the reason I am discussing very clearly. Okay. Gross receipts. All business related receipts, whether against sale or otherwise, are to be included. See, turnover means what? Turnover means only sales, either sale of goods or sale of services. Gross receipts are not like that. Gross receipts include like business related receipts. Gross receipts can be related to sales or they can be other than related to sales will also be considered as gross receipts. Best example, you received insurance. There is loss of stock. For loss of stock, you received insurance. Whatever the insurance that you have received, it is not sale of goods. It is not sale of services. Still, it will be considered as gross receipts. Quite often, we use the terms turnover, gross receipts simultaneously, but there is difference. Turnover speaks only about sale of goods or sale of services. Gross receipts speaks about sales as well as some other components. Are you able to understand? Now, you can see all amounts, cash or kind, arising from business normally taxable as business income. Cash assistance from government for exports. If you remember in PGBP chapter, when I am explaining charging section, section 28, I have explained very clearly cash assistance from government. See, I am doing 50 crore exports. Government is very impressed. I am doing more exports. If I do more exports, I will get more foreign currency. When more foreign currency comes to India, Indian economy will increase. That's why as I am doing more exports, government gave cash assistance of 15 lakh rupees to me, or government gave cash assistance of 17 lakh rupees to me. So I have done 50 crore rupees exports. How much reward is given by government? 17 lakhs reward is given by government. Whatever 17 lakhs reward given is there, this is taxable and under PGBP head. Now whatever 17 lakhs reward received is there, that is also treated as gross receipts. Are you able to understand? Whether a business recovers expenses like packing, forwarding, freight, insurance from its customers, these amounts are called as reimbursements. If such reimbursements are mixed in sales, they form part of turnover. If they are kept in a separate account, only net surplus is counted as turnover. What do you mean by this? Let's say I wanted to buy Mercedes car from Germany. Okay, now Mercedes car. I have two options. Option 1, company sells car for 2 crores. Transportation is done by company. Insurance is paid by company. Ultimately, I need to pay only 2 crore rupees to company. In this case, transportation charges are included in 2 crores. Insurance are also included in 2 crores. In this case, turnover of turnover of Mercedes is equal to 2 crores. Option 2, let's say car cost is 1.8 crore. Let's say transportation is 10 lakhs, insurance is 5 lakhs. I told Mercedes, don't pay transportation, don't pay insurance. I will pay transportation, I will pay insurance. That means what? Ultimately, to transporter, Mercedes is paying 10 lakh rupees. Ultimately, to insurance company, Mercedes is paying 5 lakh rupees. But who is giving 5 lakh rupees? I am reimbursing 5 lakh rupees to Mercedes company. That means what? Mercedes paid for transportation 10 lakhs. Mercedes paid 5 lakhs for insurance company. Whatever the expenditure incurred by Mercedes is there for transporting car from Germany to India, that expenditure is reimbursed by me. Whenever I reimburse the expenditure and it is clearly mentioned in the invoice, in that case, only 1.8 crores will be taken as turnover. Are you able to understand? So, whatever the reimbursements are there, if reimbursements are clearly shown in the invoice and separate ledger is maintained by seller, in that case, whatever the sale component is there, only that will be taken as turnover. If transportation charges, whatever the reimbursements are there, for them if separate account is not maintained, then total value will be taken as turnover. Are you able to understand? So simple. Reimbursements mixed in sales. Then whatever transportation charges, insurance, reimbursements are there, they will also be treated as turnover. However, if separate account is maintained, only whatever the actual sale value is there, only that will be taken as turnover. Okay. Next. Net exchange rate difference on export of sales done in foreign currency. What do you mean by this? On 10th October 2025, I sold goods. Sale value is equal to $1 lakh. How much? $1 lakh. On 1st October, $1 is equal to 85 rupees. Now, on 15th December 25, I received $1 lakh. I sold on credit basis. Immediately, I did not get money. I got money on 15th December 2025. How much I got? $1 lakh I got. On 15th December 25, $1 is equal to 87 rupees. Now, how much is exchange gain? I sold for $1 lakh. I also received $1 lakh. But exchange rate is different on date of sale and on date of receipt of $1 lakh. Sir, koncham PGB, yeah, someone is asking to revise PGBP. After this amendments chapter, I am going to revise all the chapters that I have discussed in question paper analysis. In question paper analysis, I have told only from 8 chapters. He is asking all the questions. All those chapters will be revised. When I am revising those chapters, PGBP will also be revised. Okay. Now, here, how much is exchange gain? Exchange gain is equal to 2 rupees. Correct? Now, 2 rupees into how many dollars? $1 lakh. Exchange gain is rupees 2 lakhs. Even exchange gain is also treated as gross receipts. Are you able to understand? So, whenever you are doing exports, because of that exports, if you get any exchange gain, even that exchange gain is also treated as gross receipts. So net exchange rate difference on export of sales done in foreign currency. Next, liquidated damages. What do you mean by liquidated damages? Liquidated damages are nothing but compensation for breach of contract. Breach of contract. Let's say I am tire manufacturing company, MRF. I entered into agreement with Tata Motors. I will sell 1 lakh tires to Tata Motors. But after 1 month, Tata Motors violated the terms and conditions of the agreement. Tata Motors said, we don't want 1 lakh tires, we want only 20,000 tires. Now, as per agreement, I manufactured 1 lakh tires, but Tata Motors is not purchasing 1 lakh tires. Tata Motors is purchasing only 20,000 tires. Now, what I will do, I will file case against Tata Motors, because as per agreement, Tata Limited should purchase 1 lakh tires from me. Now, Tata Limited breached the contract. For breaching the contract, Tata Limited paid me compensation 30 crore rupees. Now, whatever 30 crore rupees compensation I received from Tata Limited is there, that we call as liquidated damages. Are you able to understand? So, whatever the liquidated damages are there, they will also be treated as gross receipts. Next, insurance claims except for fixed assets. See, there is damage of stock. For that, you received insurance amount. Insurance amount is not a turnover, but insurance amount will be treated as gross receipts. Are you able to understand? So, whenever you receive insurance compensation, other than for fixed assets, for goods or for any other assets, if you receive any insurance compensation is also treated as gross receipts. Next, lease rent, that means whatever the rental income is there, that will also be treated as gross receipts. Hire charges, installments, you know hire purchase, right? In hire purchase, whatever the installment amount is there, okay, hire charges are there, they will be treated as gross receipts. Next, advance received and forfeited, it is like non-refundable advance. Whatever the non-refundable advance, see, let's say a party came to me, I told him I will sell 1 lakh cars to opposite party, but how can I enter into contract? There should be some assurance, right? So opposite party gave me 20 crores advance. I have taken 20 crore advance. I have given him assurance. After 6 months, I will sell 1 lakh cars to opposite party. Now, 20 crores advance I have received. After 6 months, he should make payment for all 1 lakh cars. If he do not make payment for 1 lakh cars, whatever the advance I have taken, I will not give back to him. So whatever the advance that I am not giving back, that advance we call as non-refundable advance. So if I take any advance for sale of goods, and afterwards that sale contract could not materialize, that sale contract is cancelled, I will not give back the advance. Whatever the advance that is not given back is there, isn't it income to me? Yes. Whatever the non-refundable advance that is forfeited, that is cancelled, that is not given back, that non-refundable advance will be treated as gross receipts. Are you able to understand? Value of business benefits or perquisites convertible into money or not. Let's say I went to do audit, Lalita Jewelry. I said audit fees is 5 lakh rupees. After audit, Lalita Jewelry paid me 5 lakh rupees. Lalita Jewelry owner, okay, Gundu boss will be there, right? He is very much happy with my audit. He gave me one gold ring. Now, whatever the gold ring is there, that is benefit received by me because of my profession. That is perquisite. Whatever the perquisites that are received during the course of profession are there, they will also be treated as gross receipts. Okay. Next, gross receipts exclude agricultural receipts. The thing is, agricultural income is not taxable under income tax. So if you receive any agricultural income, don't consider agricultural income in calculation of gross receipts. Okay. Rental income taxable under house property or other sources. See, here whatever the rental income is there, lease rent. If lease rent is taxable under PGBP, then that rental income is considered in calculation of gross receipts. Okay. For example, my main business is buying house properties and giving house properties on rent. If my main business is giving house properties on rent, rental income will be treated as business income to me, correct? So whatever the business income is there, rental income, that will be treated as gross receipts. But if rental income is taxable under house property or other sources, then it will not be treated as gross receipts. Next, dividend. If my main business is buying and selling of shares, then shares are stock in trade to me. If shares are stock in trade to me, then whatever the dividend is there, dividend will be considered as business income. If shares are not stock in trade, my main profession is teaching, but randomly I will buy and sell shares. I will receive dividend income. Now this dividend income is not taxable under PGBP, it is taxable under IFOS, income from other sources. Next, interest income. See, my main business is money lending business. I am into finance business. I will give loans, I will take interest. If my main business is money lending business, interest income is taxable under PGBP. That interest income will be considered in calculation of gross receipts. But if my main business is not money lending business, like I deposited some money in fixed deposit, I received interest income. Whatever the interest income that I have received, that is not taxable under PGBP, that is taxable under IFOS. If it is taxable under IFOS, it will not be considered in calculation of gross receipts. Yeah, one doubt was asked. Sir, what if the agricultural land is located in urban area? If agricultural land is located in urban area, till whatever the revenue income that is received from urban agricultural land, you received agricultural income. That agricultural income is not taxable. That agricultural income is fully exempt. And that agricultural income will not be considered in calculation of gross receipts. Okay. Next. Reimbursement of actual fare by a travel agent is to be excluded from gross receipts. However, if he runs a tour package and charges lump sum, entire package is included in gross receipts. What do you mean by this? Let's say, for example, I am make my trip. You know make my trip, right? I am make my trip. What I have done? I purchased flight ticket for rupees 8,000 for customer. Whenever customer comes, there are two cases. Case 1, case 2. I told to customer the flight ticket cost, I sold flight ticket for rupees 10,000. In this case, total 10,000 will be taken as turnover. Turnover is equal to 10,000 because I bought flight ticket for 8,000. I sold flight ticket for 10,000. So I am selling flight ticket for 10,000. How much is the money received? 10,000 is the money received. That will be treated as turnover. Case 2, I sold, like I told to customer very clearly, purchase cost to me is 8,000 and my margin is 1500. Whenever I disclose this in properly, total 9,500. Whenever I disclose like this clearly, in this case, I am disclosing to customer, my cost is 8,000 rupees, profit is 1500, total 9,500. In this case, only 1500 will be taken as turnover. Are you able to understand? So, in case of tour operator, if he discloses his margin clearly in the invoice, then whatever the margin is there, that will be taken as turnover, and whatever the purchase cost is there, this will be treated as reimbursement. Okay. If I do not disclose, if I sell for lump sum amount, okay, then whatever lump sum amount is there, total lump sum amount will be treated as turnover. Okay. Next. Share of profit, interest and remuneration received by partner. See, in case of partnership firm, partner will get share of profit, partner will get interest from partnership firm, partner will get remuneration from partnership firm. All these are not treated as turnover or gross receipts of individual partner. Are you able to understand? So, they are not treated as gross receipts in the hands of partner. Next. Write back of creditor liabilities. is business income but not included in turnover for section 44AB. What do you mean by this? Let's say there is one individual, his name is Priyatam. He is my client, for example. Priyatam is in cotton business. So he is client and I am the auditor. For 24-25, I have done audit. I said my audit fees is 1 lakh rupees. So what Preetham has done in P&L account, he has written audit fees 1 lakh rupees. In 25-26, see, on accrual basis this was recognized. On accrual basis. Preetham did not give me 1 lakh rupees, but on accrual basis, I recognized 1 lakh rupees on accrual basis, but whether Preetham paid me audit fees of 1 lakh rupees? No, Preetham did not pay me audit fees of 1 lakh rupees. Now, Preetham said he will pay 1 lakh rupees in 25-26. In 25-26, Preetham said, who will pay 1 lakh rupees audit fees for the work that you have done? I will pay only 60,000 rupees audit fees. So in 25-26, how much audit fees I have received? Out of 1 lakh rupees, 60,000 fees is received. Balance 40,000 rupees. Preetham said he will not give 40,000 rupees. I also waived off. Now tell me whether 40,000, isn't it income to Preetham? Yes, 40,000 is income to Preetham because in 24-25 he recognized 1 lakh as expenditure. But whether actual expenditure is 1 lakh? No, actual expenditure is only 60,000. So in 25-26 what we will do? By audit fees waived off. How much audit fees waived off? 40,000 rupees. That will be recognized as income. So that net expenditure, how much? 60,000 will be booked in books of accounts. Now in 25-26, 40,000 rupees is recognized as income, right? But this will not be treated as gross receipts. Are you able to understand? So in case of cancellation of liability or reduction of liability, whatever the liability that is cancelled, whatever the liability that is reduced, it is income, but that income will not be treated as gross receipts. Okay. So did you understand this point? Write back of creditor liabilities, remission or cessation is business income but not included in turnover of section 44A. This is the definition of turnover and gross receipts. So when you are calculating the limit of that 1 crore 50 lakhs, all these items are to be considered. Okay. Next, audit report. Now we are going to discuss about audit report. How tax auditor, how will how will he do the audit and how will he prepare the tax audit report? How many clauses are there in tax audit report? All those we are going to discuss very clearly now. Please don't think I am discussing very lengthily because it is new topic and questions are expected. That's why I am discussing each point very clearly to the extent possible. That's why the lecture is a bit lengthy, but it is pretty useful for you. Tomorrow, if tax auditor status is given to cost account, you also should do tax audit, right? For that, this knowledge is very much useful. Okay. Form 3CA and 3CB. Form 3CA, 3CD. For example, there is one company. Company is required to get audited under Companies Act. Audited under Companies Act. If any entity is required to be audited under any other law and audit is done, that means if already books of accounts are verified by auditor under any other law, in that case, again from tax audit is not required to be done from scratch. Tax auditor is required to prepare audit report in 3CD and it is sufficient to give that tax audit report. Are you able to understand? So, for example, in case of any person, books are already audited under previous law, under any other law, then which form is applicable? Form 3CA, 3CD is applicable. If books are not audited under any law, not audited under any law, then which form is applicable? Form 3CB, 3CD is applicable. If books of accounts are already audited under any other law, in that case, from scratch, audit will not be done. What tax auditor will do? Tax auditor will enclose, that means attach. Enclose means nothing but attach. He will attach audited financial statements and audit report under other law. Audit report under other law. And he will give his audit report. Tax audit report will be given. Tax audit report will be given in Form 3CA and 3CD. See, already books are audited under Companies Act. Then again, why to do audit from the beginning? So what tax auditor will do? Tax auditor will go through the statutory audit report. That statutory audit report will be enclosed, attached with tax audit report. And whatever the audited financial statements are there, audited financial statements will also be attached along with tax audit report. And tax audit report will be given in Form 3CA and 3CD. Sir, can you share the lecture notes? Yes, I will share the lecture notes once lecture is completed. Even these notes will also be shared with you, not a problem. Now, if books are not audited, under any law from scratch, books are to be audited from scratch, books will be audited by tax auditor. Books will be audited by tax auditor. And tax auditor will give report in Form 3CB, 3CD. Let's say I am individual. I have done turnover of 40 crores. For me, tax audit is applicable. Whether individual is required to get his books of accounts audited under Companies Act? No, Companies Act is applicable for companies, not individual. Am I required to get books of accounts audited under LLP Act? No. LLP Act is applicable for LLPs. Individual is not LLP. I am not required to get books of accounts audited under any other law. Now, whenever tax auditor do my audit, he will do audit from scratch. Every document will be verified by tax auditor and he will give report in Form 3CB and 3CD. Are you able to understand? Form 3CB, 3CD. Very simple. You can see when 3CA, 3CD applies to a person who is required under any law to get its accounts audited. 3CB, 3CD is applicable where accounts are not required to be audited under any other law. I hope you understood the difference between 3CA, 3CD. When 3CA, 3CD is applicable, when books of accounts are required to be audited under any law, 3CA, 3CD is applicable. When books of accounts are not required to be audited, then Form 3CB and 3CD is applicable. That is the difference. And I am expecting one MCQ. At least in examination, he will ask one MCQ relating to 3CA, 3CD, 3CB, 3CD. Okay, remember carefully. Form 3CA, if SSC accounts are already audited under another law, Companies Act. So already audited under another law, 3CA is applicable. If they are not required to be audited, then Form 3CB is applicable. Next. See, for 3CA, 3CB, for both 3CD is required to be given. Auditor relies on, must be accompanied with Form 3CD. So, whether auditor is giving 3CA or whether auditor is giving 3CB, for 3CA, 3CB, for both reports, 3CD is also to be attached. What 3CD is? 3CD discusses about statement of particulars. So, there are around 44 clauses. For all 44 clauses, tax auditor is required to answer. All 44 clauses together we call as Form 3CD. So in Form 3CD, 44 questions will be asked. For all those 44 questions, auditor has to answer. And whatever the answers given by auditor for those 44 questions is there, that form we call as Form 3CD. Are you able to understand? And in case of 3CA, as books of accounts are already audited, now statutory audit report is required to be given. Audited financial statements are required to be given. Audit is not required to be conducted from scratch. Only Form 3CD is required to be given. Next. Annexures, I have told you, audited financial statements are required to be given. Statutory audit report, Form 3CD. Under Form 3CB, everything is done by chartered accountant, tax auditor from scratch. That's why copy of audited financial statements and Form 3CD is required to be given. If tax auditor have any observations, those observations are to be given. Qualifications. Qualifications means you have studied in audit, nothing but observations of auditor. Qualifications in statutory auditor's report must be considered. If auditor has any differences of opinion, it must be reported in para 5 of Form 3CB. Sir, which type of questions we can expect from tax audit, practical or theory? Practical question may come, theory question may also come. Difference between 3CA and 3CB. This theory question is highly anticipated. Yesterday we discussed the practical questions. Such type of practical questions may also come. Sir, you said tax audit is required to be done. If tax audit is not done, okay, what is the consequence? If tax audit is not done, then penalty will be levied. How much is penalty? 0.5% of total sales, turnover or gross receipts, or 1,50,000, whichever is lower. Yesterday we have discussed what is due date for filing tax audit report. What is due date? Due date for filing tax audit report is 30th September of assessment year. Current month, September. So September month last date, 30th September is last date for tax audits. If tax audit is not done before 30th September, after 30th September, if tax audit is done, then penalty will be levied. How much is the penalty? Penalty is equal to 0.5% of turnover or 1,50,000, whichever is lower. Are you able to understand? That is the penalty which will be levied. Mode of submitting audit report. Nowadays, there is no manual procedure. Audit report is also required to be submitted electronically. And we as a chartered accountants, we need to do signature on tax audit report, right? we do not do manual signature, we do signature through DSC, digital signature. So tax audit report is required to be submitted nowadays electronically, and tax auditor will also do signature. He will do digital signature. Even SSC will also do digital signature. Okay. Sir, you said if tax audit is not done before 30th September, penalty is 0.5% of turnover or 1,50,000, whichever is lower. Is there any chance for waiver of penalty? Yes. If there is reasonable cause, then no penalty will be levied under section 271B. What can be reasonable cause? There are many case laws based on various instances accepted by judiciary. That means based on various cases accepted by courts. These are the various cases. Auditor resigned. Auditor resigned and new auditor is appointed. It took 4 months of time. Because auditor resigned, tax audit report could not be submitted before 30th September. It is a valid cause. In that case, penalty was waived off. All these are valid causes for late submitting of tax audit report. So in all these valid causes, no penalty will be levied. Are you able to understand? So let's say there is death or illness of partner in charge. See, proprietor is in ICU. If without proprietor, how can tax audit report will be signed and submitted to income tax department? So like if there is any medical reasons or if there is portal issues, income tax e-filing portal is not working properly, how to submit tax audit report? So all these are valid causes. In these cases, like court has waived off the penalty of 1,50,000 rupees. Are you able to understand? If books of accounts are not maintained, see, books of accounts are required to be maintained as per 44AA. What 44AA says? If books of accounts are not maintained, then penalty is 25,000. Now, income tax department came. I am not maintaining books of accounts. I need to pay penalty of 25,000. I paid penalty of 25,000. Now, if books of accounts are not maintained, how tax audit will be done? So I have not done tax audit also. So if books of accounts are not maintained, penalty 25,000 is levied. If books of accounts are not there, tax audit cannot be done. So that's why tax audit penalty will not be levied. Are you able to understand? So like this is interesting case law. In one case law, SSC is not maintaining books of accounts. So department levied penalty for not getting tax audit done. Penalty is 0.5% of turnover or 1,50,000, whichever is lower. Now SSC argued before the judge, sir, I am not maintaining books of accounts. How can tax audit penalty will be levied? If books of accounts are not maintained, penalty should be levied as per section 44AA. I will pay penalty of 25,000. Judge accepted and SSC paid 25,000 penalty. SSC argued, sir, if books of accounts are only not maintained, how can tax audit is done? You are already levying penalty for non-maintenance of books of accounts. I paid that penalty. Then how can tax audit be done? So judge waived off penalty of tax audit. Penalty of tax audit is 1,50,000. Instead of paying 1,50,000, 25,000 penalty is paid and case was closed. Are you able to understand? Interesting case law. Okay. So he argued in such a way that books are not maintained, so tax audit cannot be done. If tax audit cannot be done, why penalty is levied under tax audit? So penalty under tax audit is waived off, and penalty for non-maintenance of books of accounts 25,000 is levied and 25,000 is paid by SSC. Are you able to understand? Next, revision of tax audit report. Sir, whether tax audit report can be revised? Yes, tax audit report can be revised. Sir, how many times tax audit report can be revised? It can be revised for any number of times. So once tax audit report is submitted, if there are any subsequent changes, tax auditor can file revised tax audit report. How many times he can file revised tax audit report? He can file for any number of times. Next we will discuss annexures. I told How many clauses are there? 44 clauses are there in Form 3CD. Okay. What, like they are divided into two parts. Part A, basic details. Part B, detailed particulars of compliance with Income Tax Act. Now let us start looking at basic details and detailed particulars. You can see basic details. Name of the SSC is required to be given as per PAN. See, let's say I am doing audit of ABC Private Limited. I am doing tax audit of ABC Private Limited. I have to answer 44 questions, right? Question number 1 is, what is the name of the SSC? I have to write the legal name of the SSC. If there is a trade name, I will also write trade name. Are you able to understand? So, whatever the legal name of the SSC and trade name of the SSC is the question 1. Okay, I have to answer that question. I will write the legal name of ABC Private Limited is ABC Private Limited. If there is any other trade name, I will write the trade name also. In question number 2, I will write registered office address of ABC Private Limited. In question number 3, I will write PAN number of ABC Private Limited. See, Aadhaar number will not be there for company. I will not write Aadhaar number. If I am doing tax audit of individual, for individual Aadhaar number is there. Optional, if I want to give, I can mention Aadhaar number also, but PAN number I need to mandatorily give. Okay. Next, for ABC Private Limited, if there is any GST registration certificate, I will mention GST number, GSTIN. If there is any customs registration, export registration or import registration, IEC code will be there, import export code. Okay, I will mention that import export code also. That is question number 4. Question number 5, I will mention status of the SSC. Whether ABC Private Limited, is it individual, company, LLP, AOP, BOI? It is company, right? I will write ABC Private Limited is a company. That is question number 5. Next, I will write previous year. I will also write assessment year. See, nothing but audit report. After doing the audit, whatever the opinion of auditor is there, that is given in 3CA, 3CB. Okay, if there are any observations of auditor, those observations will be given in 3CA, 3CB. After giving audit report, we also need to give 3CD. Auditor should answer 44 questions. All those 44 questions are kept in Form 3CD. Along with audit report, Form 3CD is also required to be given. Okay. Sir, what is the time limit for revision of tax audit? Tax audit can be revised till the end of assessment year. Okay. Till the completion of assessment year, tax audit can be revised. Okay. Next, question number 8. Clause of section 44AB, A to E, under which audit is conducted. See, tax audit is required to be conducted under section 44AB. Tax audit. Under 44AB, there are clauses. Clause A, Clause B, Clause C, Clause D, Clause E. Under which clause you are required to get tax audit done? That clause is to be specifically mentioned under section 44AB. Okay. Next, we have discussed in regular class, there are optional tax rates 115 BAC and alternative tax rates 115 BAA, BAB, BAD, BAE. If SSC is paying taxes under 115 series, then you have to answer clause 8A, under which section SSC is paying taxes, 115 BAA or 115 BAB. That section is to be clearly mentioned in tax audit report. Okay. Next, part B. Part A, very simple, basic questions, name, address, PAN number, GST number, like this. Part B, very important, listen carefully. In case of part B, question number 9. If you are doing tax audit of a partnership firm, who are the partners? Who are the members in the company? All those members list along with PAN number is required to be given. I am doing tax audit of ABC Private Limited. Whoever the shareholders of ABC Private Limited, all the names of the shareholders are to be given along with PAN numbers. Okay, so names are to be given. Profit sharing ratio. So if I am doing tax audit of partnership firm, what is the profit sharing ratio that is to be given? And in current year, if there is any change in profit sharing ratio, at the time of admission, retirement, or change in constitution, there will be change in profit sharing ratio. The change in profit sharing ratio is also required to be disclosed properly in question number 9. Next, question number 10. What is the nature of business or profession? Company is engaged in which type of business? Real estate business, or wholesale business, or retail business, or service oriented business? What is the nature of business? That is to be clearly given in question number 9. Next, that is to be clearly given in question number 10. Next, question number 11. What are the books of accounts required to be maintained? Prescribed means what? Required to be maintained. For example, doctor is there. Doctor is required to maintain books of accounts as per Rule 6F. Daily case register is required to be maintained. Opening and closing stock of medicines are required to be maintained. So whatever the books of accounts that are required to be maintained, that question is to be answered in question number 11. And what are the books of accounts actually maintained by SSC? Where those books of accounts are maintained? Okay, in which address books of accounts are maintained? If books of accounts are maintained online, we need to give IP address. Okay, that laptop or computer IP address where books of accounts are maintained, that IP address is also required to be given. And whatever the books of accounts examined by, that means what? Verified by tax auditor. So 3 questions, 3 answers you have to given in clause 11. In clause 11, you have to tell what are the books of accounts required to be maintained, what are the books of accounts actually maintained, and what are the books of accounts verified by tax auditor. All these 3 answers are required to be given in clause 11. Next, clause 12. Presumptive income disclosure. See whether SSC is disclosing income for any business under 44 AD, 44 ADA, 44 AE. So that presumptive income disclosure is also required to be given. Next, clause 13. Method of accounting, changes and ICDS. What is the method of accounting followed by SSC? Accrual basis or cash basis? Company is there. As per Companies Act, it is mandatorily follow accrual basis, mercantile system of accounting. So we will write what is the method of accounting followed by SSC in clause number 13. And in current year, is there any change in method of accounting? If there is change in method of accounting, what is the impact of change in method of accounting? That is to be answered in question number 13. Next, question number 14. Method of valuation of closing stock. You know valuation of closing stock, right? Closing stock will be valued as per ICDS 2, either on FIFO basis or on LIFO basis. So what is the method of valuation of closing stock? That is to be clearly answered in clause number 14. Next, in case of conversion of capital asset into stock in trade, you know conversion of capital asset into stock in trade, right? Section 45(2). This we have discussed very clearly in capital gains chapter. So is there any conversion of capital asset into stock in trade? If so, what is the date of purchase of capital asset? What is the date of conversion? What is the fair market value on the date of conversion? How much is capital gains? How much is PGBP income? All that information is clearly to be given in clause number 15. Clause number 16. Items not credited to P&L account. See, export incentives. If you get any insurance compensation, they are to be credited to P&L account. They are to be treated as PGBP income. if any items are not included in calculation of PGBP income, tax auditor should clearly specify export incentive is received but it is not treated as income. As SSC did not treat it as income, in tax audit report in clause number 16, tax auditor should clearly mention export incentive received, it is taxable under PGBP but it is not credited to P&L account. That observation is to be clearly written in clause number 16. Okay, next. In case of transfer of immovable property, we have discussed section 50C, section 43 CA. Whenever immovable property is transferred, stamp duty value will be there. If stamp duty value is greater than 110% of actual consideration, stamp duty value will be taken as full value of consideration. If stamp duty value is less than or equal to 110% of actual consideration, then actual consideration will be taken as full value of consideration. So whatever section 50C, 43CA is there, if any immovable property is sold in current previous year, then 50C, 43CA is applicable. Those observations are also required to be answered. See, all these clauses, just like newspaper reading, please read. Okay, you need not do by heart. You need not remember everything, because in examination he will not ask write all 44 clauses of 3CD. That question will not come, but he will test, okay, whether any information is required to be given in 3CD or not. So let's say in question asked whether GST number is required to be given in 3CD. Yes, you have to give the answer. Yes, GST number is given, required to be given in 3CD in part A. You should be able to answer like that. So you need not do butty. Okay. You just read all the clauses just like newspaper reading and try to remember the important points sufficient. You need not do butty of all 44 clauses. Theory question will not be asked. Next, depreciation. You all know under income tax, depreciation is calculated blockwise. So that depreciation details are required to be given in clause number 18. How you calculated depreciation? How much is opening written down value? How much is the depreciation amount? How much is the closing written down value? That is required to be given. Next. Deductions under section 33AB, 33ABA, 35. We have discussed section 35, scientific research. So, if any deduction is claimed under 33AB, 33ABA, 35, whether the deduction is properly calculated and properly claimed as deduction or not, auditor has to verify and auditor has to write his observation in question number 19. Okay. Next, question number 20, employee payments. See, employee like EPF, employee provident fund, employee ESI, that amount is collected from employee and it will deposited to government by employer. So when it comes to provident fund, okay, what is the amount collected from employee? What is the amount deposited to EPF account? Whether amount is deposited before due date or not? All these questions, what is the nature of fund? How much amount is taken from employees? What is due date? What is the actual amount paid? What is the actual date of payment? All these answers are to be given by tax auditor. Okay. And bonus or commission. If any bonus or commission is paid to employee, such bonus or commission is allowed on cash basis. Whether bonus is really paid to employees, whether commission is really paid to employees, that is required to be written as answer by tax auditor in clause number 20. Okay. Clause number 21, very important. Write down, important. You need to remember clause 21. Shall I discuss clause 21? Inadmissible expenses. You all know in PGBP, some expenses are not allowed as deduction in P&L account. Capital expenditure is not allowed as deduction in P&L account. Personal expenditure is not allowed as deduction in P&L account. Political party advertisement expenditure, that is not allowed as deduction in P&L account. So what are the expenses that are not allowed as deduction in P&L account as per income tax provisions are there? All that information is required to be given by tax auditor. So what tax auditor will do? Tax auditor will verify books of accounts of Companies Act. In P&L account of Companies Act, what are the expenses? What are the amounts debited to P&L account but are not allowed as deduction, but are not allowed under Income Tax Act, but are not allowed under Income Tax Act. All that information is required to be given. Capital expenditure, personal expenditure, political party advertisement expenditure. If there are any club expenses of personal nature, they are also required to be added back. Okay. And if there are any expenses prohibited by law, we have discussed penalty is not allowed as deduction. For example, you are doing audit of transport company. Transport company paid challans to Road Transport Authority for violating the rules of Motor Vehicles Act. If any, let's say driver is going without license, challan was levied 10,000 rupees. 10,000 is paid by transport company. By 10,000 was paid, it is the expenditure for violating Motor Vehicles Act. Now that 10,000 is not allowed as deduction. Are you able to understand? So if any penalty is paid, penalty is not allowed as deduction. So auditor has to verify all the expenses. Are there any expenses which are in the nature of penalty? If there are any expenses in the nature of penalty, they are not allowed as deduction. So those penalties are required to be reported in clause number 21. Okay, clause 21, very, very important. Don't skip. Okay. Next, 21, clause 21, subclause B. See, in regular course of business, whenever payment is done, TDS is required to be deducted. Whether TDS is deducted or not, auditor has to verify all the payments. Auditor has to report those transactions for which TDS is not deducted. So, an auditor has to verify if TDS is deducted, whether it is paid to government or not. After deduction of TDS, if TDS is not paid to government, what are those transactions? That information is required to be given. So, auditor has to report payments. Payments for which TDS is not deducted, payments for which TDS is deducted but not paid to government, okay, but not deposited by due date under section 139(1). All the information. So whenever you are doing tax audit, what are the transactions for which TDS is not deducted, that is required to be reported in clause 21 subclause B. If TDS is deducted, you have to check whether it is deposited to government or not. If it is not deposited to government, those transactions are also required to be given in clause 21 subclause B. Okay. Next, you know, in case of partnership firm, maximum interest allowed is 12% simple interest. Maximum remuneration allowed is remuneration as per book profits. Actual remuneration to working partners or remuneration as per book profits, whichever is lower will be allowed. So you have to verify whether interest paid. You have to verify calculation of interest paid, calculation of remuneration. Whether interest paid is less than 12%. If interest paid is more than 12%, that information is required to be given in clause 21 subclause C. You have to verify whether remuneration is as per book profits. If remuneration paid is more than book profits, then extra remuneration is not allowed as deduction. That is also required to be given in clause C. Next, disallowance under section 40A3, 40A3A. You all know, if any per person per day, you should not make cash payment of more than 10,000. If you have made cash payment of more than 10,000, that is not allowed as deduction. So auditor has to report what are the transactions for which more than 10,000 cash payment is made. That is required to be disclosed in clause D. So entire PGBP, only if you have knowledge of all PGBP provisions, then only you will understand this 3CD clause, because as per PGBP provisions, if there is any violation, that violation is required to be reported in tax audit report. Are you able to understand? Next, gratuity. I have told you in class, provision for gratuity is not allowed as deduction. But if gratuity is really payable, if gratuity is paid, then it will be allowed as deduction. So with regard to gratuity, whatever the information is there, that is required to be given in clause E. Next, employer contribution. Employer contribution is allowed as per section 43B. Okay. So if employer contribution is actually paid, then only it will be allowed as deduction. Otherwise, it will not be allowed as deduction. So employer has to give details. What is the employer contribution? What is the due date? When it is actually paid? How much amount is actually paid? All this information is required to be given in clause 21 subclause F. Okay. Next, contingent liabilities. You know contingent liabilities, right? A case was filed against the company. We do not know whether we will win the case or we will lose the case. If we lose the case, we need to pay penalty of 50 lakh rupees. Now, 50 lakh rupees penalty is payable if we lose the case. So, we will write provision. We will recognize the provision for contingent liability. But provision for contingent liability is not allowed as deduction under income tax. So, if there is any provision created for contingent liability, that is required to be given in subclause Z. Next, expenditure relatable to exempt income. See, with regard to exempt income, for example, agricultural income is there. For earning agricultural income, you have incurred agricultural expenses. Agricultural expenses are not allowed as deduction under income tax. Sir, why agricultural expenses are not allowed as deduction under income tax? Because when you are getting agricultural income, no tax is there. That's why agricultural expenses are also not allowed as deduction under income tax. So are there any agricultural expenses or are there any expenses against exempt income? That information is required to be reported in subclause H. Next, interest on borrowings. We have discussed in case of capital asset, from date of purchase up to put to use, whatever the interest is there, that interest will be capitalized. After put to use, whatever the interest is there, that will be debited to P&L account. That information is required to be given properly in clause I, subclause I. Okay. Next, any amount not allowable under section 43B(H). What do you mean by this? Recently, a provision was introduced, MSMEs. If there is agreement, as per the agreement, whatever the due date is there, within the due date, payment should be made to MSME. Then only allowed as deduction on accrual basis or allowed as deduction on cash basis. If there is no agreement, then payment should be made in 45 days. If payment is made in 45 days, allowed as deduction on accrual basis, otherwise allowed as deduction on cash basis. Tax auditor has to give the report. What are the payments made to MSMEs? That information is required to be given properly in clause 22. Okay. Next, 23. Particulars including PAN for payments to related parties. In current financial year 25-26, are there any payments made to related parties? If so, whatever the transactions with related parties are there, all those transactions are required to be given in clause 23. Are you able to understand? Next, even PAN number of related parties are also required to be given. Next, deemed profits under section 33AB, 33ABA. So as per 33AB, 33ABA, if there is any deemed profit, that is required to be disclosed in clause 24. Next, clause 25, particulars of deemed profits under section 41. For example, bad debts. You have written bad debts. You have write off bad debts. Subsequently, there is recovery of bad debts. Recovery of bad debts is treated as deemed profits under section 41. So whatever the deemed profits under section 41 are there, they are required to be given in clause 25. Okay. Next, section 43B compliance. We know there are 6 payments covered under 43B. These 6 payments are allowed as deduction only on cash basis: leave encashment, employer contribution to provident fund, statutory payments, interest on loan taken from specified financial institutions, and like amount payable to Indian Railways. All these payments are allowed as deduction on cash basis. So are there any payments covered under 43B? If there are such payments, that information is required to be given in clause 26. Okay. Next, clause 27. Amount of ITC availed and its treatment in P&L account. You know about input tax credit, right? You would have studied in GST. What is the amount of ITC claimed under GST? And what if ITC is allowed? Okay. If ITC is not allowed, then it is the cost. That ITC amount will be debited to P&L account. That input tax credit particulars are required to be given in clause 27. Okay. Next, clause 28. It was there once upon a time. Now clause 28 is removed. It is no longer applicable. Next, clause 29A. Report forfeited capital asset advances. We have discussed. If any advance is received for capital asset and that advance is forfeited, if forfeiture happens before 1st April 2014, advance forfeited will be reduced from cost of acquisition. If advance is forfeited on or after 1st April 2014, then advance forfeited is taxable under other sources. That advance forfeited information is required to be given in clause 29A. And if there are any gifts received which are taxable under other sources, that information is required to be given in clause 29B. See how much exhaustive. Doing tax audit is not simple. When you are doing tax audit, even though you do not do tax audit, if you answer all these 44 questions, it's like you have done tax audit only. So as a control, chartered accountant can do or cannot do tax audit. He can blindly do the signature. That's why 3CD was introduced. Tax auditor has to answer 44 questions. So income tax department, in those 44 questions, it asked all the questions. Chartered accountant has to verify all books of accounts to write answers for these 44 questions. Okay. See how much information is asked in 44 clauses. Almost every information is asked. Correct? Next, clause 30. Report if any borrowing repayment on hundi is made other than account pay check. Hundi means what? Like unauthorized promissory note. Let's say I took one paper. On that paper I have written I will pay 2 crore rupees to Mr. Preetham after 2 months. I gave that paper. Income tax department has done raid. In Preetham house, they found the paper on which I have signed I will give 2 crore rupees to Preetham. Whatever the paper which is not promissory note, plain paper on which I have written I will pay 20 crore rupees is there, that we can call as hundi. Okay, so hundi means it is unauthorized note. So using unauthorized note, if I give money to any person or if I have taken any money from another person, that amount will be treated as undisclosed income and on that 78% tax is applicable. So are there any money taken on the basis of hundi or not? That information is required to be given in clause 30. Next, clause 30A, primary adjustment. Super point we discussed in transfer pricing. Primary adjustment means difference between arm's length price and actual price. So are there any international transactions done in current year? If so, whether transfer pricing provisions are applicable? Yes. If transfer pricing provisions are applicable, we need to calculate arm's length price and auditor has to give the information. What is the primary adjustment? What is the difference between arm's length price and actual price? That information is required to be submitted by chartered accountant. And what is the amount of adjustment? What is the excess money? Excess money should be repatriated to India. Otherwise, secondary adjustment. Excess money is deemed as loan given and on that interest income will be calculated. Correct? So all this information is required to be given by tax auditor in clause 30. Next, 30B. Whether SSE incurred interest more than 1 crore to associated enterprise, section 94B. Actually, section 94B, 7 marks question. In every attempt, he is asking, when you take loan from associated enterprise, you will pay interest. Total interest is not allowed as deduction. Actual interest paid or 30% of EBI TDA will be allowed as deduction. So whether any loan is taken from associated enterprise, whether any interest is paid, that information is required to be given in clause 30B. Okay. Next, clause 30C. Report whether SEC entered into impermissible avoidance arrangement. We discussed GAR provisions, right? So whether SSC actually entered into any impermissible avoidance arrangement. If so, that information is required to be given in clause 30C. Next, clause 31. We have discussed section 269 SS. No one should take cash loan more than 20,000. No one should repay loan more than 20,000 rupees in cash. We have discussed in 269T. And whenever you are doing business, in business you should not take cash more than 2 lakh rupees. That is to be disclosed in 269 ST. So clause 31 is all about 269 SS, 269 ST, 269 T. Very important. I told clause 21. Clause 21 is very important. Clause 31 is also very important. Mark down. So under clause 31, we are going to give information of 269 SS, 269 ST and 269 T. Okay. Next, clause 32, it is all about losses. Are there any brought forward losses? Are there any brought forward unabsorbed depreciation? Are there any brought forward capital losses? All losses information is required to be given in clause 32. Next. Clause 33, Chapter 6A deductions. Whether SSC claimed any Chapter 6A deductions. If so, all the conditions given under Chapter 6A deductions, are they satisfied or not? That information is required to be given in Clause 33. Under Clause 34, we will give TAN number. There will be TAN number, right? TDS collection, deduction and collection account number. So, what is the TAN number of ABC Private Limited? That TAN number is required to be given. Whether ABC Limited has done TDS deduction or not, or whether ABC Limited has done TCS collection or not, TDS payments, TCS collection, all that information, TDS deducted, deposited, shortfall, all that information is required to be given in clause 34A. And whether ABC Private Limited has filed TDS returns, TCS returns or not, that information is required to be given in clause 34B. Next, clause 34C, report interest liability. See, if you deduct TDS in the month of August, you should pay on or before 7th September. So whatever the TDS deducted, that will be required to be deposited on or before 7th of next month. So you have to identify whether TDS is deposited before due date. If TDS is not deposited, interest will be levied. Rate of interest is 1%. If TDS is not deducted. If TDS is deducted but not deposited, rate of interest is 1.5%. All that information is required to be given. Even interest liability calculation is required to be given in clause 34C. Next, clause 35, quantitative details. If you are into trading business, how much quantity of goods you have purchased, how much quantity of goods you have sold, that quantitative information is required to be given in clause 35. Under clause 36, you need to give this information about deemed dividend. We discussed 222E under income from other sources. Private limited company, if it gives any loan to the shareholder who is holding more than 10% shares, then whatever the loan given, it is also treated as deemed dividend. So after verifying books of accounts, if any such loan is given, those details are required to be given in clause 36. Okay. Next, clause 37. whether cost audit is applicable to a company or not. If cost audit is applicable, whether cost audit is done or not, what are the observations of cost auditor. Okay, that information is required to be given in clause 37. Next, excise audit. Whether excise audit is applicable to a company or not. If so, whether excise audit is done or not, what are the observations of excise auditor, that is required to be given in clause 38. Next, under clause 40, we need to give financial ratios. We need to give a gross profit ratio, net profit ratio of current previous year as well as for previous year. You can see ratios for current year and last year, total turnover, GP ratio, NP ratio, stock in trade by turnover, materials consumed, finished goods produced. All this information is required to be given in clause 40. Next, demands and refunds. So, if any income tax is payable, if any GST is payable, under any law, is there any demand or is there any refund received in current year? That information is required to be given in clause 41. Next, clause 42, whether SSC filed statement of financial transactions. See, there is one concept, filing of statement of financial transactions. So, there are certain persons, for example, bank is there. Bank should give information to income tax department. If anyone deposits more than 10 lakhs in one account, information should be given to income tax department. That information we call as statement of financial transactions. Whether SSC, okay, who is required to give statement of financial transactions? Did he give that SFT information or not? Whether he gave that information before due date or not, that information is required to be given in clause 42. Next, whenever transfer pricing provisions are applicable, whenever there are international transactions, country by country reporting is required. Whatever the information of country by country reporting is there, that is required to be given in clause 43. Next, clause 44, this is introduced after GST. Okay, there will be expenditure, right? You should give breakup of total expenditure. So out of total expenditure, how much amount you paid to registered GST dealer, how much amount you paid to composition dealer, how much expenditure you paid to unregistered dealer. All this information is required to be given in clause 44. Okay, so these are 44 clauses of form 3CD. Next, general tax points. If any clause is not applicable, auditor should clearly state, not applicable. For example, I am doing audit of ABC Private Limited. Cost audit is not applicable to ABC Private Limited. Then for clause number 37, what I will write? I will write cost audit is not applicable. So out of 44 clauses, if any clause is not applicable, tax auditor should mention that clause is not applicable to the SSC. Next, overlapping income or expenditure. That means what? If any information is required to be given in two clauses, you can give information in one clause, same reference you can give in another clause. Okay. Differences of opinion. I am saying depreciation rate is 10%. SSC is saying depreciation rate is 15%. So if there is differences of opinion, tax auditor should give in the observations opinion of tax auditor and opinion of the SSC, and income tax department will take the decision. Next, incomplete or inaccurate information by SSC. I wanted to do tax audit, but SSC is not giving information. What to do? So if SSC is not giving information, that is to be properly disclosed in tax audit report. SSC is not giving information, I could not give proper tax audit report. That is to be clearly mentioned in the tax audit report. Next, reliance on case law. While doing tax audit, if you are relying on any judgment, court judgment, that court judgment is also required to be given in tax audit report. These are general tax points. Okay. Now you have listened this much, right? Now shall we see illustration 4 and illustration 5? Two questions are there. Shall we see them? Illustration 4 and 5. Illustration 4. XYZ Limited having TAN has made following payments during the year. Professional fees to Mr. X gross 1 lakh. TDS is deducted 10,000. Professional fees to Mr. Y. See, TDS is there. In which clause TDS details are required to be given? You can see clause number 34A, 34B. You have to give information of TAN, TDS deducted, deposited, shortfall, whether TDS TCS returns are filed or not. You should give in clause 34A and clause 34B. Okay. Professional fees to judge 40,000. It is more than 30,000 na. TDS is required to be deducted, but TDS was not deducted. This is to be reported in clause 34A. Payment made to Mr. Z 40,000 professional fees, TDS not deducted, not deposited to government. That information is to be given in clause 34A. Next, yearly rent 2 lakh. It is less than 2.4 lakhs, right? If you remember section 194I, threshold limit for payment of rent is 2,40,000. Here rent is less than 2 lakhs. So, TDS is not required to be deducted. All the aforesaid transactions are related to 31st March 25. Company has paid the TDS being deducted by it on 25th April 25. TDS written in form 26Q has been submitted by it on 10th May 2025. See, TDS deducted, TDS paid on 25th April. See, in March 25, if any TDS is deducted, due date is 30 April 25. So, when it was paid 25th April, so it is paid before due date. Paid before due date. And TDS return in form 26Q. It is submitted on 10th May 25. For TDS return, due date is 31st May 25. So, TDS deposited before due date, TDS return is also filed before due date. Sir, do we have to remember all clauses? Try to remember the clauses, otherwise write as per 3CD information is required to be given. You need not mention the clause. Okay. To the extent possible, some are very important. I told clause 21, clause 31, clause 34. Okay, in clause 31, we will report about 269 SSST, 2690 information. Okay. So you can read the answer. On 40,000 TDS was not deducted. If TDS is not deducted, how much is disallowed? If any payment is made to resident and TDS is not deducted, 30% is disallowed. 40,000 into 30%, how much? 12,000 is to be disallowed. Okay. So that is mentioned. And you can see in clause 34, we need to mention 194J, 194I, whether TDS is deducted or not. You can see PAN number of SSC, section under which TDS is deducted, required to be deducted. What is the nature of payment? Fees. That is mentioned here. How much is the payment? What is the amount of TDS? Whether TDS is deducted or not, all the information is required to be given. And I don't think so at this much level question will be asked. If it is asked, you need not write this table. This is given in the institute material. You can write plain answer. Okay. Amount paid is 2,90,000. TDS required to be deducted is 29,000. TDS actually deposited. TDS actually paid. In that way, you can write line by line information. You need not remember the table. You need not draw the table. Okay. Next, clause 21 I have told. In clause 21B, whether if TDS is required to be deducted and if TDS is not deducted, that information is required to be given. You can see on 40,000, TDS was not deducted, that is required to be deducted 40,000. PAN of the payee to whom amount is paid and their address. You have to give information of transaction where TDS is not deducted. Next, shall we see illustration 5? The following transactions are recorded in books of MSPL. On 1st April 24, loan taken from ABCL Maharashtra PAN via RTGS. How loan was taken? Loan was taken from by RTGS. If loan is taken by RTGS, okay. Loan should not be taken in cash. If loan is taken in cash and amount of loan is more than 20,000, then 269 SS gets attracted. Here loan is greater than 20,000, but loan is taken by way of RTGS. So 269 SS will not get attracted. Even though 269 SS do not get attracted, whenever loan taken is more than 20,000, that information is required to be given in clause 31. Okay. Next, interest paid to ABCL via RTGS 2,25,000. Repayment of loan. This is relating to 269T, right? See, whenever loan taken is more than 20,000, whenever loan repaid is more than 20,000, 269 SS, 269T provisions you have to check. In all those cases, even though loan taken is in the form of bank, still you have to report the transaction. You have to report loan taken is more than 20,000, but it is not taken in cash, it is taken by way of bank transaction. 269 SS provisions are not applicable. In that way, you have to give the disclosure. Okay. Loan taken from ABCL via RTGS, interest credited, net of TDS. See here, TDS was deducted. As TDS was deducted, with regard to TDS, two clauses are there, clause 21 and clause 34. And with regard to loan, clause 31 is there. So you have to report under clause 21, clause 34 and clause 31. Those three clauses, in those three clauses, you have to report the information. You can see here, clause 31, whenever loan is taken and on interest TDS has been deducted, clause 34A, 34B, repaid the loan, clause 31C. So as per those clauses, you have to give the information. How much is the loan taken? From whom loan is taken? Maharashtra Bank. What is the PAN number? How much loan is taken? How it is taken? By way of RTGS. All this information is required to be given. You need not draw this table. You can write line by line. Amount of like 62,70,000 is taken from Maharashtra Bank. PAN number of Maharashtra Bank. It is taken by way of RTGS. PAN number of Maharashtra Bank. In that way, line by line, you can write the information. And whenever loan is repaid, okay, you need to write information of 269T. Okay, how much loan is repaid, to whom loan is repaid, PAN number of payee, and how loan is repaid, cash or bank. That information is required to be given. Okay. So this is all about tax audit. I hope you understood this concept. It's very important, I'm feeling, because tax audit, many like ICMA and many cost accountants want to do tax audit. So if they want to do tax audit, if cost accountants are to be given tax audit signature, they have to have sound knowledge about tax audit. That is the reason this chapter is introduced. So we can expect at least 7 to 9 marks from this chapter. Prepare carefully. Okay. Thank you very much. Thank you everyone. Okay. And like I kept lot of effort to develop this material and to explain you all this. More than 3 days it costed me. I have kept lot of efforts. So if you like this, please share with all your CMA friends also. Okay.